Welcome to week 4 of our project Hiring in Toronto. I'm your host, Peter Kurbelian, co-founder of Plus5XP, where we help young professionals simulate 5 years of experience. We can tell you quickly that the Greater Toronto Area has confirmed growth in the job market. How can we tell? Well, the weekly moving average is still hovering above the monthly moving average by 27.1%. To go over the project quickly, we've been collecting job creation data from LinkedIn since April 4th. Using trend analysis, we'll be able to monitor the health of the job market using the following lines. The blue line is to show how many jobs were created for that particular day. This line will show great volatility, but this shows us what the short term looks like. The black line represents a 7-day moving average of job creation data. This line will be less volatile and represent the medium term. We will now incorporate a red color representing a 30-day moving average of job creation data. This line will represent the long term. The idea is to now compare the day, how many jobs were created today compared to how many jobs were created on the average of the last week of the jobs that were created on the average of the last month, and see are we higher or lower. To confirm strong growth, we need to see both the blue and the black line over the red line. Now let's look into the data. We already gave you a quick update, but let's look into the data for the Greater Toronto Area. Since April 4th, the weekly moving average has decreased by 13.2%, which we'll definitely need to keep an eye on. However, it's not all bad, as it's still above the monthly moving average by 27.1%. This means that we're still growing. All job types are showing confirmed growth. However, let's look at them individually. I don't know what was happening on Tuesday, but the rest of the week looks solid on full-time employment. Overall, the weekly average has decreased by 16%, but is doing better than last week. Also, we shouldn't be worried because it's over the red line by 24.6%. Now, we said that part-time was more popular in Toronto than Montreal, but what happened on Wednesday? 127 jobs were created. Big opportunity there if you need a job quickly. Go jump on that. This chart is boring to explain. We still have confirmed growth for contracts, but there's nothing much else to talk about. Time to see how the top industries in the Greater Toronto Area are holding up. Computer software confirmed growth last week and has pushed its lead further. However, it's still not back to the original weekly moving average. Looking at some companies that you can apply to, we have Amazon, SI Systems, and Talent Lab. Information technology and services is still holding on to the confirmed growth status and has been creating a strong number of jobs daily. Weekly average has been below the April 4th data point, but we're still comfortably over the monthly moving average. Companies here to look at are AWS or Amazon Web Services, Scotiabank, CIBC, and HOOP, Healthcare of Ontario Pension Plan. To be honest, HOOP only has 6 jobs, but I really want to say their name. Financial services are on the rise across Canada, but especially in Greater Toronto Area. They're strong technicals and over the monthly moving average by 33.6%. This is just the beginning. Companies to search for positions: BMO Financial Group, TD, and Zurich Insurance Company. Now here's a small heads up for our viewers. We don't have any trends yet, but the marketing and advertising industry, as well as the insurance industry, are popping up on the top 5 recently. 497 jobs were created for marketing and advertising, and 496 jobs were for insurance in just a 2-day span. That's crazy, and please look into it more. Now let's look at the experience level needed for these jobs. For internships, there is still minor volume and the weekly moving average is still over the monthly moving average. So if you're interested in an internship, go get it. You have nothing to lose. The companies to check out, we have Celestica, Champ Sports, Loblaws Company. Entry level finished the week very strong. Over 1,000 jobs created in just 2 days. If you need a job coming out of school, this is the area to look at. Check out Sienna Senior Living, Lowe's Company, IGA, Randstad, and Home Depot Canada. The associate level took a dive on Monday, but shot right back up. The weekly moving average has grown above the monthly moving average by 17.1%. So for university students graduating, this is a perfect time to take advantage of a strong daily output for job creations. Companies to target are Magic Leap, Brookfield Asset Management, CIBC, and CPP Investments. Mid-senior level ended the week on a strong note and is now performing over the monthly moving average. This is a great time for individual contributors to apply to management positions if they're at a senior level. There's no risk and all reward. Companies to target are IBM, AMD, William Osler Health, and Amazon. Director levels ended the week on a strong note as well. Seems like it's a good time to be a director right now. Weekly moving average is up 28.6% from the beginning and resting above the monthly moving average. Companies to target are Loblaws Company, Scotiabank, and Amazon Web Services, AWS. The executive level is all over the place, but it still has confirmed growth. Companies to target here are City of Brampton, Sitco Group, or to get placed by Crossover for Work or Randstad. Thank you for watching this video. If you have any questions, please comment them below. Also, like our video and subscribe to our channel as we'll be doing this on a weekly basis. As a takeaway, here are the top companies and top job titles used last week.